Happy Friday to everyone. Let's take a look at how we're ending the trading week. Let's start with the S&P 500 index. This week, the S&P 500 is closing, as we can see, with a red candle. This is a weekly chart. Despite good reports, by the way, the S&P 500 is starting to fall. And we can see that since the beginning of 26, there has basically been no growth. The movement has been rather weak. Right now, everyone is saying that because companies like Google, Meta, and others, which are mainly the ones pulling the index up, have heavily invested in artificial intelligence, which people no longer believe in, the situation has changed. Now, investors are showing more interest in more down-to-earth, more understandable technologies rather than these computational ones. Technologies related to virtual computing power. That's why the companies that have bet on artificial intelligence are now being sold off, despite good earnings reports. And now there's a trend that artificial intelligence as an investment doesn't pay off, doesn't bring returns, and requires significant investment. These investments have been made, but nevertheless, they are not bringing the profit, that is the growth in company earnings that was expected. That's why we may see a further decline in the S&P 500, which I also expect in the coming weeks. And in fact, the trend is already noticeable. As for Bitcoin, we can see that over the past week, Bitcoin hasn't shown any significant movement of the price. Last Friday was quite a red day for us. Or even Thursday, let's call it a red Thursday. Then there was a rebound, but nevertheless, there was no return to the 75 to 85,000 mark. So the downward movement continues, which is also what most people expect now, judging by what's in the media. Based on traders' expectations, everyone basically agrees. I don't think Bitcoin will keep falling further, meaning this upward channel. I drew it. In the previous chart, I showed you that if we look at the big picture, the movement of Bitcoin throughout its entire history, yes, we can see that in fact the price is moving within this channel. Of course, I zoomed out a lot, but nevertheless notice that in 2020 that was exactly the peak. If you look at the boundaries, in March 2020 there was this dip below the lower line of the channel. So people expect that something similar could happen. But to be more specific, because right now most people are also expecting, here's a repeat of 2022, when we saw a gradual decline, and then we bounced off the lower boundary of the channel, and then Bitcoin slowly started to go up. So is it possible to expect a further gradual decline to 60,000? I think yes, we can expect that. But there's an important point. Today we have the release of the US Consumer Price Index data. If this Consumer Price Index turns out to be neutral or better than expected, then overall we might see a sharp bounce to the 75 to 85 range. This won't be a full-on reversal or a surge upward. There's simply no reason to take off right now. But some kind of technical bounce could happen because after all, the number of short sellers is currently very high. And it feels like right now there's a need for some good positive reason to disappoint the short sellers, so to speak, and see that bounce. But again, we'll only see that after the data is published. And then we'll be able to see whether this happened or not with Ethereum. Right now, it's hard to say anything specific because Ethereum is closely following Bitcoin's lead. So naturally, Ethereum will grow whenever Bitcoin grows. Accordingly, we will likely see this pair climbing upward in tandem if we witness substantial and definitive shifts in Bitcoin's movement toward growth. But so far, that is simply not yet clearly observable on the horizon. So what else can we look at together? Right now, those who are holding Bitcoin short term are taking heavy losses and they're starting to sell their Bitcoin. Those who have been holding Bitcoin for a long time and bought it 3 to 5 years ago are continuing to hold. And some people are even buying more. Basically, this shows that those who know how to wait are taking advantage. They use these dips, take advantage of the opportunities the market gives them, and make long-term investments. Short-term cryptocurrency holders, as a rule, lose out badly during such drops. As for the fear and greed index, we can see that extreme fear has persisted in the market for several weeks in a row. We are in the fear zone. And overall, this may indicate that the market is now starting to enter the oversold zone. And it seems that we are slowly approaching the end of this fear zone, and there should be some positive news soon. And either something significant needs to change for a rebound to happen. When that will occur, I don't know. But for several weeks in a row, the fear and greed index has remained low. This usually happens before some major news or some reason for a rebound upward. That's why those who know how to wait are usually the ones who win in the end. Well, if we look at the overall market capitalization, yes, it has now dropped to a level that is in fact more like the level of 2024. Yes, the entire 2-year growth of the cryptocurrency market has basically been lost. But again, let's remember that everything can change very quickly. Take a look, for example, at 2024. On November 4th, the market capitalization was $2 trillion and 0.29. Let's round it up. And already by December 16th, so just a month and a half later, the market capitalization had grown by almost $1.5 trillion. So the situation can change very quickly. That's why you shouldn't focus on the fact that we've been falling for several weeks in a row. The situation can change quickly. We also don't see any significant surge in inflows into crypto ETFs. Well, there is a small inflow into Bitcoin. There's practically none into Ethereum. So let's see how today's situation with the US Consumer Price Index turns out and how the market will react to it. That's all for now. Have a great weekend, everyone, and bye-bye.